Welcome back for another deep dive with us. Today we're going to be looking at something that I think is pretty relevant to, well, I guess anybody who's ever run a business or anybody who's
or thought about investing.
Yeah, invested in a business.
Yeah.
We always hear these stories about, companies hitting hard times.
Right.
And having to sell off their assets for just pennies on the dollar.
Sometimes for even less. Yeah.
Yeah, are these fire sales?
Yeah.
These fire sales,
Are they real?
are they a real thing?
Yeah. It's a great question.
Or is this just, something that we all just sort of...
Anecdotal.
Yeah, anecdotal evidence.
Yeah.
How do we actually prove or disprove
Yeah.
that this is a real thing?
Right. How do you know that that's not just the seller telling you that to get you to buy it?
Yeah.
Right.
Well, luckily, we've got some really interesting research to dig into today.
We do.
From Todd Pulvino. And he looked into the world of commercial aircraft to try to figure out if fire sales are real.
That's right.
So how do we get from, airlines to fire sales? What is the connection here?
Well, I think the easiest way to think about it is that airlines, they're very capital intensive.
Yeah.
And they've got these big assets, these planes.
Right.
And so the airline industry is always going through these booms and busts. And they have a history of getting into financial trouble.
Oh, yeah.
So if you're thinking about, when an airline gets into trouble, sometimes they need to sell those planes to raise cash.
Right.
And that's where this whole idea of a fire sale comes from.
Okay.
Because when everyone in the industry is having trouble, the only people who are going to buy those assets are outsiders.
Ah, so they can name their price.
Yeah, they can name their price.
Okay.
And this is actually...
I'm starting to see how this works.
Right. This is based on a model from Shleifer and Vishny, who are these famous economists.
Okay.
And they said, when an industry is in distress, there's going to be some companies that have to sell assets.
Right.
But the only people that are going to buy them are going to be outsiders who can name their price.
So, we're talking about, a bank suddenly owning a fleet of airplanes.
Or a hedge fund.
Yeah.
Right.
Okay.
And in fact, Pulvino highlights a really cool example from the Texas Air 1989 annual report. And they say, quote, Eastern needs substantial liquidity to implement its business plan.
Oh, yeah.
And expects that it will continue to sell assets to provide such liquidity.
Okay, so they're admitting that, hey, we're in trouble.
Yeah, we got to sell stuff.
We're going to have to sell some things off.
To make some money here.
Yeah. So Eastern Airlines was in trouble, and they were looking to sell off assets.
Right.
But how do we know what that fire sale discount really is?
Well, that's where the research gets really fun. Because he uses this model, this statistical model, to isolate the impact of financial distress on aircraft prices.
Okay.
And he's got to account for all this other stuff, right? So, the age of the plane, the model of the plane, the market conditions at the time.
Sure.
To really figure out.
So we're comparing apples to apples.
Exactly, comparing apples to apples.
Okay.
And what he finds is that airlines with a lot of debt and very little cash, what he calls low spare debt capacity, end up selling their planes for a significant discount to anybody compared to airlines that are in better financial shape.
Okay, so how much of a discount are we talking?
Well, he finds that on average, they sell their planes for about 14% less than airlines that are in good shape.
Well, 14%?
But wait, there's more.
Uh-oh.
During industry downturns, that discount goes up to 30%. When they sell to financial institutions like banks and leasing companies.
Okay, so if you're desperate, you're going to get a much worse price.
Yes.
But on the other hand, there are some airlines out there who are probably in a really good position to take advantage of that.
That's right. And he finds that airlines in good financial shape actually ramp up their buying.
During these downturns.
Yeah. They're like, this is a great time to buy planes.
Let's go shopping. Yeah. Everything's on sale.
Exactly.
Right.
And so what we see is that, companies in good financial shape are taking advantage of these opportunities to buy planes at a discount.
And the companies that are in bad shape, they have no choice but to sell.
Right. And they get a much worse price for them.
So one company's, trash is another one's treasure.
Exactly. And so I think what's really interesting about this is it tells us that financial decisions really matter. It's not just about...
It has real-world consequences.
Yeah, it has real-world consequences. It's not just about how well you run your airline.
It's also about
or how well you,
how much debt you have,
yeah,
how much cash you have.
how you've managed your books.
All that stuff matters.
Yeah.
When it comes time to sell your planes.
Yeah.
Or any other asset.
Okay, so we've seen how this plays out with airlines, but like, why should anyone else care about this? Like, why should our listeners care about this?
Yeah, I mean, it's really a question about whether the capital structure of a company matters.
Right.
And this research shows that it really does.
Yeah.
You know, it's not just about
Right.
how well you run your business. It's also about how much debt you have,
Yeah.
how much cash you have.
Right.
You know, all that stuff
Yeah.
can come back to bite you
Right.
if you're not careful.
So for investors out there,
Yeah,
this is super relevant too, right?
Yeah.
Like,
absolutely.
if you're looking for opportunities, this is like, hey,
Go find the fire sales.
yeah, find the fire sales.
Yeah.
Yeah.
And swoop in.
And get a good deal.
Yeah.
I mean, it's like going to
Right.
a store
Clearance sale.
when they're having a clearance sale.
Yeah.
Like, you want to be there when they're desperate to get rid of stuff.
Yeah. Okay, so but let's play devil's advocate for a minute.
Okay.
I mean, couldn't someone say that you know, this discount that we're seeing isn't really because of financial distress. It's just that, like,
What if they're just selling
they're selling their old planes.
old crappy planes? Yeah.
Planes that are about to,
The ones that need a ton of maintenance.
yeah, they need a ton of maintenance, or they're just, you know,
Right.
they're just getting rid of their junk.
Yeah, that's a great question. And so Pulvino
Yeah.
addresses this in the paper.
Okay, so what does he say?
And he says, well, let's look at things called sale-leaseback transactions.
Oh, okay.
So imagine you sell your car, but then you immediately lease it back.
Okay.
So you're still the one who's responsible for maintaining it.
Right.
So the price that you get for that car
Right.
is not going to be
As
influenced by the condition of the car.
Right.
Right. Because you're the one who's going to fix it.
It's more about your own financial situation than the actual car itself.
Exactly.
Okay.
And he finds that even in those cases,
Okay.
airlines in financial distress
Yeah.
get a worse price.
For their planes?
Yeah.
Okay, so that kind of proves
That suggests that it's not just about the plane.
that it's not just about the plane.
It's also about their financial situation.
Okay.
And he also has this cool case study
Okay.
where he looks at
What is it?
the sale of a bunch of planes
Okay.
by Braniff Airlines.
Okay.
So Braniff went bankrupt
Uh-huh.
in the early 80s,
Okay.
and they sold 11 of their 727-200 aircraft
Mm-hmm.
to People Express.
With People Express. Okay.
And when People Express
Yeah.
issued debt
Mm-hmm.
to finance this purchase,
Okay.
they included independent appraisals
Okay.
for each of the aircraft
Mm-hmm.
in the prospectus.
So we know what they're actually worth.
Exactly. So we have a really good idea
Okay.
of what those planes are worth.
Yeah.
And he finds that Braniff sold those planes
Yeah.
for a discount of about 32%,
32. Wow.
even after you account
Wow.
for the cost of refurbishment.
So even taking that into account,
Yeah.
they got a really bad deal.
You got a bad deal.
Wow. Okay. So
So that's even more
yeah.
than what the statistical analysis suggested.
Okay. So the fire sale effect is real.
Yeah.
For Braniff.
At least for Braniff.
Yeah. And for probably a lot of other companies out there.
Probably.
Okay. So we've been talking about airlines.
Yeah.
But are there other industries where you see this fire sale phenomenon?
Oh, absolutely. I mean,
What are some of them?
I think any industry
Yeah.
where you have companies that have a lot of physical assets
Right.
and are susceptible to these economic swings.
Right.
So, real estate
Real estate. Yeah.
is the obvious one.
When property values go down,
Yeah, when property values go down, developers are
having to sell.
forced to sell
Yeah.
at a loss.
Okay. What else?
Shipping,
Shipping. Yeah.
manufacturing, even tech companies that have a lot of
Specialized equipment.
specialized equipment
Yeah.
that they need to
Yeah.
produce their products.
So basically anything where,
Yeah.
the assets.
If those assets become a liability,
Yeah.
then
Then you're susceptible to a fire sale.
you're susceptible to a fire sale.
Okay.
So I think,
So what are some takeaways that our listeners should keep in mind about this whole fire sale thing?
I think the biggest takeaway is that, fire sales are real.
Mm-hmm.
And they can have a significant impact
Yeah.
on asset prices.
Yeah.
Yeah, they're not just a theory.
It's not just like a,
That's like a textbook thing.
a theoretical.
Yeah.
Like,
yeah.
they're actually happening out there in the world.
All the time, yeah.
Yeah. And it's kind of crazy to think that, that you could have something that is super valuable.
Yeah.
But the circumstances surrounding the sale of that thing can so drastically affect the price.
The price that you get.
Yeah.
Yeah.
Wow. Okay.
And
it just
there are
underdo.
listeners out there who are thinking about, maybe investing.
Yeah. What should they be thinking about?
What are some things they should keep in mind?
Well, I think the biggest thing is to be on the lookout.
Yeah.
For fire sales.
Okay. So how do you do that?
Well, I mean, you've got to do your research.
Okay.
You've got to understand,
Yeah.
The industries that you're interested in.
Right.
And you've got to be able to identify
those companies that are in distress.
Okay. And not only that, but
Yeah.
once you identify a company in distress, you have to understand why they're in distress.
Exactly. And are they just trying to unload their garbage?
Right.
Or is there actually some value there?
Is there something good there?
Yeah.
So it's not just like, oh, this price is low, I'm going to buy.
Right. You've got to
see more to it.
You got to do your due diligence.
Okay.
It's kind of like that old saying.
Yeah.
If it sounds too good to be true.
It probably is.
It probably is. Yeah.
Yep.
And then on the flip side, for the folks out there who are running businesses, what are some key takeaways they should keep in mind?
Well, I think the biggest thing is to make sure you've got a strong financial cushion.
A buffer.
Yeah.
Yeah, some wiggle room.
Some wiggle room.
Yeah.
Because,
So being strategic about
how you're spending and saving.
Yeah, if you don't have that wiggle room, you're going to be more susceptible.
You're going to be forced
to these fire sales.
To make a bad decision.
You're going to have to sell at a discount.
Yeah.
And you're not going to get.
You don't want to be in that position.
You're not going to get the best price.
You're at the mercy of the market at that point.
Exactly.
Well, this has been a fascinating look at fire sales.
Fire sales.
And the impact that they have on businesses and investors.
Yeah.
We've learned that, those everything must go moments.
Right.
They're not just a catchy phrase.
They're real.
They're real.
Yeah.
It's a real thing.
They're real market events.
Yeah.
With real consequences.
And hopefully this deep dive has given you, our listeners out there, some new insights.
Yeah.
And a new lens to look at.
Exactly.
In the world of investing and finance. Yeah.
And finance.
So thanks for joining us on this deep dive.
Yeah. Thanks for listening.
And until next time, keep exploring, keep learning, and keep diving deep.